What is up, guys? Welcome, welcome, welcome. Crypto FUD. And let's jump right into this, guys. We got a big day today. Jerome Powell is going to be talking here soon in the next, we're going to get the Fed decision here coming up in the next in the next about 10, 15 minutes. What's going on, Flip? And then we're going to also hear what Jerome Powell has to say as far as interest rates and how they're going to be reducing them. I'm calling it in September. So, get yourself some popcorn. If you're driving right now, make sure you got that air flowing. Turn the volume up. Let's get into it. Before we get into anything with Jerome Powell, let's cover a couple things. We have 10 minutes to kill before we get any word on what's going on here. Ethereum right now battling that 3,800. Bitcoin right now at around 117,675. Looks like we are hitting our head at a key spot right here at around 117,850. Pretty much the same as what we've had yesterday. We've been kind of teeter-tottering. We did see, as of earlier, I believe, we did have a nice little move towards the upside. GDP numbers dropped today, and they actually came out very well. They were expected to come at around, I believe, they don't have the numbers on here, but GDP was supposed to come out forecasted around 2.8, and it actually came up at 3% growth quarter over quarter. Based off the previous GDP numbers, we were in the negative. So a 3% growth quarter over quarter is definitely a good thing for the economy, good thing for the market. Why didn't we, take off? Well, because we still have so much uncertainty in front of us, right? We have Jerome Powell coming out today. Obviously, in the next 10, 15, Jerome Powell's going to be coming out in 30 minutes, but we have a lot of, macro numbers dropping today. We have unemployment dropping on Friday. Like I said, it's a big macro week that we have right now, so it's going to be a lot of uncertainty. Any really big moves that we see, whether it's towards the up or the downside, most likely is going to be short-lived, in my opinion. So, but today, before we start listening to Jerome Powell talk, the main thing is going to be basically, his wordage. What is he saying? Because we already know for a fact, literally the whole market already has priced in 96.9%, 97% of the market investors are already basically indicating that we already know there's going to be a pause for today. If you go over towards September, it has shifted even more. Didn't see this. It shifted even more. 40% of the market's calling for some kind of a pause in September, and you have about 58, 59%. We'll call it 60% calling for some kind of a reduction in interest rates. So not too good on September, but I do think after Jerome Powell talks today, if we get what I'm anticipating, potentially him coming out very dovish, indicating that there are going to be some reductions in interest rates coming up soon, aka September, I think that's going to shift over. Ricky, what's going on, brother? What's going on? I got my Boston boys here today. Your friends at Boston. I always try to mimic that Samuel Adams commercial. I know you guys are like, bro, that was terrible. I'm a Florida boy. What can I say, bro? I'm trying here. I am trying, bro. Let's fly through some things real quick. We have 8 minutes until we're going to get some numbers out. All right, Flip, you liked it. I appreciate that. So for the day, bro, what is going on with Hex? Hex has been killing it day in and day out for the last 3 or 4 days. They're up another 21% today. Ricky said it feels like Florida over here. Bro, imagine if it's hot where you're at, bro, imagine what it is down here. It's scorching. But it's hot everywhere right now, dude. The only difference is the humidity, I think, is just, it's obviously going to be higher down here. But regardless, it's hot, right? So you can see across the board, looking at the daily, pretty much red across the board. We have TON up about 1.6%. We have Curved AO up about 3%. We have Pulse X, which is basically runs with Hex. Both of these are up 20+%. Pulse Chain up 16%. There must be something going on with Richard Hart and his project, because they're definitely doing really well today. So, but for the most part, you can see nothing but red. Ethereum slightly up about 1% today, above that 3,800 level as of now. So not looking too bad. Let's look at Bitcoin dominance real quick and see. Nice. Dominance is basically hanging there, looking like she wants to come back down. So awesome. Still actually, looking like she wants to continue to move down. Like I said, once we get below that 60% level, I think we're going to be on to the races. Zbeck right now, looking like she wants to break out of a bull flag as of now, sitting around that 54 area as of now. So not too bad. Let's jump into, so a couple things right now. I think White House right now, they were actually talking, if I'm not mistaken. I think, if I'm not mistaken, Trump was talking a little while ago. But the White House is set to unveil a closely watched crypto policy report. So the crypto report is to outline administration's views on tokenization. Report will lay out regulatory and legislative proposals, and Trump courted cash from crypto industry on campaign trail. Oof. So let's see here. Trump is set to release a report on Wednesday, which is today, that is expected to outline the administration's stance on the tokenization and the market-defining crypto legislation, among other issues critically important to the digital asset industry. Shortly after taking office in January, Trump ordered the creation of the Crypto Working Group tasked for proposing new regulations and making good on his campaign promise to overhaul U.S. crypto policy. So that's supposed to drop today, which is going to be pretty good. JP Morgan to enable crypto purchases via credit card and Coinbase tie-up. So it looks like JP Morgan, Coinbase open crypto assets access for credit card holders. Move highlights growing mainstream traction for digital assets, and the crypto exchanges shares rise 3%. So that's pretty cool. I mean, I don't know about how I feel about people buying crypto on credit cards, but I mean, if it brings in more money. Ricky said Zbeck's hanging solid. It really is, bro. Zbeck is really, I was honestly anticipating us coming back down at least to retest that 40-41 area that was such big resistance, right? I was like anticipating that we were actually the 43. You can see we came up and we hit our head multiple times on this. So I was like kind of expecting us to maybe come back down to retest this 43 area, but we've been holding solid. We really have. We've been really holding solid for Zbeck, so it looks great. I know Flip's going to be happy about this. Base surpasses Solana in daily token creation, powered by Zora's content coins. So it looks like Base hasn't dethroned Solana, but they had a good day yesterday from what it looks like. So Coinbase's layer 2, what time is it? We're good. Coinbase's layer 2 network, Base, has emerged as the leading blockchain for daily token creation, surpassing Solana for the first time since 2023. This shift is primarily driven by Zora, a protocol that enables users to turn digital content into tradable tokens. Base flips Solana. No pun intended on that one. Trump just posted a photo cut in September. Is it on his X? Where are you following Trump, bro? You're on social? Truth Social? I don't see it on his X page. Flip's following him on Truth Social, of all people. I'm just looking to see if we have the feed up. He is talking right now. Trump holds us off. Oh, okay. I'm just making sure we're not missing anything yet. I have it on another screen. No effing way. So let's see here. We still have like 2 or 3 minutes. So according to data compiled by Sea Launch on Dune Analytics, Base saw over 100,000 new tokens minted on July 27th and 8th alone. Most of them are originating from Zora. In comparison, Solana-based platform like Pump Fund and Let's Bunk produced significantly lower tokens during the same period. Base creator Jesse Pollock highlighted the milestone, noting that the network now leads all other on-chain token insurance. So Zora recent rise marks a notable trend in the evolution of content monetization on the blockchain. While the platform initially gained attention before April's airdrop, it recently spiked in activity, reflects renewed interest in content coins, tokens created by individuals, posts, or ideas. So basically what it sounds like, I'm not familiar with Zora whatsoever, but it sounds like what they're doing is like, let's say like today it's the Fed meeting, right? There's probably a bunch of tokens that are being created in regards to the Feds, like Jerome Powell token or something like that. It sounds like what this is pretty much what it does, right? Just people being able to create their own tokens. Obviously nothing new, but it basically surrounds anything that's relevant right now, like recent events is pretty much what it is, which we see that on Solana all day. And just probably what it is that you're seeing a new platform or newer platform. A lot of people are using it. And like I said, I mean, shout out to Base. One thing that I will say that Base always is going to have for them is that they're going to have a lot of eyes on them and a lot of liquidity coming in and out of the Base ecosystem, given that they're literally owned and ran by Coinbase, the second largest central exchange. Yeah, I mean, I'm going to definitely check out some Base plays for sure. But I'm going to stay loyal to Solana right now, you know? I don't really care about recent current event, meme coins and stuff like that as of now. But I mean, if we can make money off of it, I'm definitely down, right? So if you guys are just joining, welcome. We're a couple minutes. Let me see if they dropped any of the news on the Feds. Nothing yet. So what's going to happen is we're going to get the news. We're going to basically find out that they're going to do a pause, right? Which is going to come out probably in the next 30 seconds. And then within the next 20 to 30 minutes, Jerome Powell is going to be coming out to talk. And we're going to watch that live. If you guys have any plays or anything you want to pull up in between now and then, let me know. We are going to be here. I have a beer open. Actually, I'm drinking whatever this is the vodka soda. It's pretty fire. And it is 2 o'clock where I'm at, so. Just looking to see if there's anything. No info yet. Bitcoin just spiked up to 118 literally. Bitcoin, I'm going to put it on the 1 minute so it can be very dramatic as we're watching what's going on today. Let's see here. I'm guessing we just got information. Not yet. What's going on here? Holy crap. Bitcoin literally, like literally 5 minutes ago, just jumped up to 118, and then look at that. This news had to drop. What's going on, TradingView? They're giving me like. Ooh. I don't have anything yet, but the market's reacting. The market is reacting for sure. Bill, what's going on, brother? What's going on with TradingView? They're not giving me any info. Let's see. Oh, there we go. So we just got the information. Obviously, we already know the Feds they paused again. They paused again. Trump, we already know, I'm not going to get into any kind of rant, but it looks like they paused again as of now, and you can see the market. Yeah, rates unchanged. Exactly. You can see, I mean, I don't even understand why people are selling off. We knew what was going to happen. Like, the market already had it priced in. I swear, emotional investors here. It's crazy because right before it dropped, you saw a nice little spike. We ran up to 118, right? You could see all day we've been basically hitting our head at around 117.8. We saw the spike up literally like 2 minutes before the news dropped, jumped up to 118, and then the news drops news that we already knew, that the Feds were going to be pausing rates. We already know this, guys. We already know this. The big thing for today. The big thing is what we're going to be listening to is what Jerome Powell, his wordage. That's going to be the big thing. We want to see what the hell he is going to be talking about as far as if he's indicating some kind of a reduction coming up soon, hopefully in this next meeting, which is going to be in September. So far, just in the last 5 minutes, it's starting to shift. If you guys remember, just a little while ago, it was 40%. Now it's 38%. 2% has already shifted over. I'm like I said, I'm curious to see what we're gonna see today as far as what he says, and this will be dropping in the next 20 minutes. Him coming out live, so get your popcorn ready. Bill said people actually thought they would change the rates. That's what I don't understand. Like, I don't understand. This was not a surprise to anybody. Anybody knows that they were not going to reduce interest rates. Flip said he's leaning towards a September reduction. Exactly. That's what I've heard. That's what I heard yesterday. That's what was kind of going around in the grapevines. I am just waiting here. I'm waiting to see when they start getting like everything set up as far as the stage, and we'll jump in on the meeting. We have about 20 minutes until they do. With that being said, I guess we can just cover a couple other things. We flew through everything else. Fear and greed right now at 63 right now, so we're looking pretty good with that. Flip said I want a vodka now, bro. These things are fire. Vodka and soda. They're not bad. They're definitely not bad, bro. When I was on the cruise, that's all I was drinking. I don't really drink a lot of vodka, but I was drinking vodka and Red Bull. Vodka and Red Bull. Let's see here. I wanted to read into this article. So, U.S. banking giant J.P. Morgan partnered with Coinbase on Wednesday to allow customers to fund their wallets using the Chase credit cards and buying cryptocurrency on exchange starting in fall of 2025. Once viewed wary by traditional financial institutions, the digital asset industry has gained enough traction among consumers and investors that large banks are now entering the space. From custody services to card-linked purchases, financial heavyweights are increasingly offering crypto-related products and mulling new use cases for the tokens, signaling how far the once nascent market has matured. The cryptocurrency market recently touched a $4 trillion valuation, and has expected to grow further as regulatory clarity in major markets such as the United States drives broader adoption. Damn Coke. Starting in 2026, Chase customers will be able to redeem credit card reward purchases for USDC, a US pegged dollar pegged stablecoin, and directly link to their bank accounts to Coinbase to fund crypto purchases. So it says here they will be able to redeem credit card reward points for USDC and directly link their bank accounts to Coinbase to fund crypto purchases. So obviously they're allowing people to buy they're going to allow people to buy crypto from the Chase credit cards, right, via Coinbase. But I'm kind of confused on here with the they're going to be redeeming credit card reward points for USDC. I'm guessing the more stable coins they hold potentially or buy, I don't know, they're going to get reward points. I don't know about that one. I'm confused a little bit on that one. Allowing Chase points, but what do they mean though? Like, are you going to be able to buy USDC with your rewards, right? That you've accrued, or are you going to be getting rewards from purchases of USDC to buy crypto? But do you understand what I'm asking here? I'm a little confused on that one. Okay. And then it says Coinbase shares rose 3% in the morning. This was this morning after the partnership was announced. Stablecoins are a type of token designed to shield users from price volatility and are widely used as a bridge between traditional finance and digital assets. With rising demand for low cost, instant transactions, and stablecoins are poised for a rapid growth as adoption spreads across payment, trading, and emerging financial platforms. I wonder if this is why ZBEC holding really well. Because think about this. With the rising demand for low-cost instant transactions, stablecoins are poised for rapid growth as an adoption spreads across payments, trading, and emerging financial platforms. I'm wondering if potentially ZBEC is getting a little bit of some solid ground because of this, and also the next chapter right here. Crypto adoption is set to accelerate following the passage of Genius Act, which is Genius Act was basically opening the floodgates for stablecoins. I'm wondering if this is going to affect ZBEC positively because of payment solutions and stuff like that. You know what I'm saying? Bill said that spells credit card debt for Ricky. You think Ricky has credit card debt, bro? When you're a millionaire, you don't have credit card debt, bro. Did you not see what he's building? His pool house? Don't let Ricky fool you guys, all right? When he's like, oh, I'm at work right now. Yeah, Ricky's at work overseeing billion-dollar freaking projects. He pulls up for a little while and then he's out. Okay, I appreciate you, Flip. So you said reward points to buy crypto. That's what I was thinking. Look at this nice little V-shaped recovery. Remember, we're on the 1 minute, so this is going to be very dramatic. It's going to be very dramatic. Nothing yet, Jerome. Nothing set up yet. AI, what's going on, brother? AI said I tapped into Shiba on base, made thousands, and it went 100x. I'm about to make the most serious gain ever. The team is doing a lot and is sick of the old Shiba, and now and how they used all of us. Let me ask you this. So you said that you're on. Let me see here. So you tapped into SHIB. I'm guessing that's Shiba, right? On base. Is it the same devs? I can see how you made some money on that, bro. Look at that. Beautiful chart. Freaking, oh, it's not the same. Comes from the Floki team. I wonder why they called their project SHIB. I mean, I guess Shiba, I understand kind of, but holy shit. It's not even telling me the gains off of this, but look at this chart. That's massive. It started off 9 zeros. It's at 8 zeros right now. So I mean, it ate up a zero for sure. Nice move. I mean, it looks legit, bro. It looks legit. It has a small market cap, which is great. $3.7 million market cap. Liquidity is at around 400,000. This is on Uniswap, right? You can see almost 200,000 freaking holders. That's crazy. That is crazy. Volume kind of low on Uniswap though. I will say that. Is this is it right here? Yeah. Eduardo says worthless coin on Solana by Moonshot. But this one isn't on this. I don't think they're talking about the one on Solana, bro. They're talking about on Base, unless we're talking about two different things. Yeah, that's the only thing I would say, bro. Is like the volume seems crazy low, and really looking at it, they're not on any central exchanges as of now. So I mean, you have basically that. This needs to be dropped on. Did this just get released or something? Hold on here. It's only been out for about a month and 2 weeks. So I mean, the chart looks good. Chart looks good. Volume's low. Eduardo, are you talking about SHIB though on Base? I'm guessing you are because you said it got released on Moonshot, which Moonshot's Dex is from the Dex screener, is what I'm guessing is what you're saying. They just got listed on CoinMarketCap today. Okay, that makes sense. I was wondering, I'm like pulling up, I'm looking at like the 7 day, the monthly, the year, and it's just basically the same chart because I guess they show the chart of when it gets dropped on CoinMarketCap, right? So they're just basically showing us today's chart. And I guess that hence why it's up 17%, I would imagine. So we were just talking about this this right here, this article, Base surpasses Solana. This was 2 days ago, and daily token creations. Now, remember, they're talking about, like on here, they're talking about Base surpass Solana on token creations. They're not talking about surpassing Solana on actual volume, right? Because if you go over here and we look at Solana, 24-hour, Solana is untouchable with $10.5 billion in volume on their DeFi. Base right now is at 1.64 billion. So though Base is doing very well, right? 1.6 billion is nothing to, snark at. $10 billion is just untouchable, right? They're literally doing 9 times the volume of Base right now on Solana. So I mean, but I do think that Base is definitely gonna really start competing with Solana as far as volume as well. It's on Coinbase Wallet. Yeah, because Coinbase Wallet is basically it's like a DeFi wallet. So they're gonna carry it. It's on Base. Oh, okay, I see. Eduardo said no, bro. Worthless coin. It's on it's on worthless. I've seen that plenty of times. I think oh, this one's new. Oh, you know what I'm thinking of? Of Useless. That's what I was thinking of. Useless. Remember Useless dropped like 2 weeks ago? Well, this one dropped 2 weeks ago too. Worthless. Definitely not doing too bad. $9 million market cap. Nice little curvature right there, bro. This one would have been a good play for one of our trenches. AI, definitely, brother. If you guys are just joining, we have about 10 minutes, guys, until Jerome Powell comes out. We have about 10 minutes until he comes out here. I have another screen monitoring what's going on, and as soon as we get the live feed, I'm going to be bringing it up to you guys. If you guys have any other projects you want to pull up, let me know. I'm going to put, Eduardo, I'm going to put this on the watch list so we can, if we go to the trenches later on tonight, we can keep an eye on it. What's Bitcoin doing? Guys, before Jerome Powell comes out, I'm gonna go use the bathroom real quick. I gotta pee. That vodka's hitting me. Hold on. All right, we're back. Whew. Eduardo said the guy leading the project wants to make it its main token for Moonshot Launchpad. Hell yeah. Let's do a poll real quick. Real quick, we have about 9 minutes until Mr. O'Pally comes out. Let's do a poll real quick, guys. All right, so I just dropped a poll. One to keep it simple. So basically, is Powell going to come out? Is he going to be bullish? Like, is he going to be indicating Fed, some reductions in the interest rates coming up soon, possibly September, or is he going to come out bearish and say the same shit that he always says for the last 6 months? What does he say? Uncertainty, tariffs. Those are the two main things of his vocabulary. Uncertainty, tariffs, monitor, right? Those are going to be bearish right there if he says any of that crap. What do you guys think he's going to be saying? Make sure you guys hit that vote. We got 8 minutes, guys. 8 minutes. Let me see if they have... Nothing yet. Nothing yet. EOS, what's going on, bro? He said, bro, I started watching your channel since me lady. That's been a while. That has been a while. I was just talking about that, I think, yesterday. We have not, been covering me lady at all because she's just been, I hate to say it, but it's been such a disappointment. It really has, right? Unfortunately. But I was talking to somebody yesterday when we pulled up the chart, and I was like, you know what, dude? It's got like a $25 million market cap right now. I wouldn't be surprised if we all write it off. Kind of like Floki, dude. Everybody wrote off Floki, and then this bull run, Floki's been doing pretty damn well. I wouldn't be surprised if something like that happens for me, lady. Amor, what's going on, bro? Amor said, what's up, y'all? I turned the big 4-0 today. Holy crap. Let's all wish Amor a happy 40, bro. Happy 40. Listen, we're all behind. We're right behind you. And some of us are past you. Right? 40-40. I heard 40 is the new 20, bro. Is what I'm hearing. 40 is the new 20. Happy birthday, brother. Got about 6 minutes until Mr. O'Pally comes out. Flip said 60 is the new 40. All right. 60 is the new 40. 40 is the new 20. Then what's the new 30s? Or what are the 30s? The new 10s? This is what we were talking about earlier at the beginning of the stream. GDP jumps 3% quarter over quarter. That was this morning. But Bitcoin can't break 118. So strong 3% GDP growth beats expectations. Stocks itch up slightly while Bitcoin gains a modest 0.4. This is as of earlier. Hovering around 118. Trump celebrated the numbers and pushed for a rate cut as markets await today's Fed decision. And we already know what the Feds basically they're not pausing, or I'm sorry, they are pausing. They're not reducing any interest rates as of now. This was as of 18 minutes ago. It says, although swings in net exports continue to affect the data, recent indicators suggest that the growth of economic activity moderated in the first half of the year. The unemployment rate remains low. BS. The labor market conditions remain solid. Inflation remains somewhat elevated. BS. BS. The committee seeks to achieve maximum employment inflation at the rate of 2% over the longer run. Uncertainty about the economic outlook remains elevated. The committee is attentive to the risk to both sides of its dual mandate. This was released from the Feds right after they basically indicated that they were. Let's see what Mr. Trump's got to say. We have 4 minutes. 4 minutes. Flip.
Each point
Relax.
that this gentleman keeps up costs us $365 billion a year. Think of that. 1 point, $365 billion. If you bring it down a point, we save 365. We should be the lowest interest rate, and we're not. We're 38, number 38, because of the Fed.
DD, what's going on, brother?
The Fed. He's done a bad job. Now he's got a meeting today, but I call him too late. You know, he's always too late. Even if he does it today, probably won't. I hear they're going to do it in September, not today. For what reason? Nobody knows. But Europe, as you know, cut their rates 11 times in the last short period of time.
So do you guys understand the frustration? And this is what I was telling you guys a while back. It's not that, you know, and remember, we're not getting political. We have about 3 minutes until Jerome comes out. The point of why Trump really wants these rates reduced is because of the U.S. debt, right? U.S. debt has to pay interest off of its debt. Every point is what they're saying. Every point that that they reduce saves the U.S. saves you and I, right? $365 million annually, right? So they keep they're keeping interest rates elevated, and while that's happening, the U.S. is having to pay trillions, basically pretty much a little over $1 trillion every year just in interest off of its debt. Why do you think they want to reduce this debt so much, right? They want to get rid of this debt as fast as possible through tariffs or whatever the case is. But the best thing right now is to reduce interest rates now that inflation has gone down, right? Inflation has come down so much compared to its high. We're at what, 2.4%, and unemployment has come up. The Feds originally a year ago were saying that they were going to start reducing interest rates when the unemployment reached about 4%. We're at 4.2% right now, and it's anticipating to go up on this Friday to 4.3%, and the Feds still keep saying the same shit. Uncertainty, tariffs, and I think everybody's just over it. We're all over it now, where it's like, dude, it's been past due that we should have reduced interest rates a while back. And just like he was saying, Europe has reduced interest rates 11 times already. Small increments, but they've already started reducing over a year ago interest rates. And we're still sitting here at the same spot from 8 months ago when Jerome Powell decided to reduce interest rates right before the election, right? But now that was when inflation was over double where it's at right now. Just, it's craziness. It really is craziness here. Let's see here. We have to have something. Nothing yet. Excuse me. Nothing yet. What is going on here? AI said thoughts on BNKR and debt relief bot DRB. I'll pull that up in a second. Let me just see here because we should have Jerome Powell coming out like any second here. This guy gonna be late. No pun intended on that one. Oh, okay. Let's see here. Is this going to be Jerome Powell's? I believe this is it right here. Let's bring this onto the screen. I believe I got live feed. This should be it right here. I'm going to keep the charts up in the background. This is going to be Bitcoin so we can see what's going on as he is talking. Let's pull up. We still have a few minutes, I guess, until he's going to come out. So let's see here. So thoughts on BNKR. Is that Banker Coin? It's an Ethereum-based project. $66 million market cap. Liquidity looks great.
Good afternoon.
Oh, he's here.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
You guys can hear everything, right?
Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments.
Guys, does it sound good?
Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods.
You said it, tariffs.
Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
Come on, give us something.
At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, this is going to be the big thing, is the questions. This is what we want to focus on.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September.
Here we are.
Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects.
2.4%.
The labor market is solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data.
This guy can't give us
inform our
anything,
assessment of the
bro.
balance of risks and the appropriate setting of the federal funds rate.
So, just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting, is that potentially adequate to make a decision to lower rates at that point?
So you're right, we do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement.
Uncertainty.
Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
He's got to pull out his talking points.
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So, at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again.
There have been several deals that have been struck, and now we seem to have an idea what the tariff rates are going to be with some of our large trading partners.
Yeah,
Does
so
that not
where's the
add to the
uncertainty
kind of
coming
certainty
from?
you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still, a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more.
Uncertainties.
It doesn't feel like we're very close to the end of that process, and that's not for us
Bitcoin
to
just broke a
judge. But it feels like there's much more to come. As well, looking ahead.
Solid support level. Look at this. Bitcoin's dropping.
Hi, Mr. Chairman. Neil Irwin with Axios.
Bitcoin's
This morning we got a
dropping.
GDP report in which
117.3.
final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which
Exactly,
we think
Ricky.
is
I
a narrower
agree with
but
you, bro.
better signal for
Everybody's
future,
over it, dude.
for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many, many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable. Which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment. Not so much growth. So the labor market looks solid.
That's basically what he's
Inflation
saying,
is
Ricky.
above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
Which is crazy because
given the
inflation
fluid
is
labor supply
down, dude.
situation,
It's
is
at
there a number for
2.4%.
this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because
That's all they're focused on is
it's
unemployment.
True that the
Unemployment
demand
drops this
for
Friday.
workers
It's gonna
in
be a
the
big
form of,
deal,
let's call it
guys.
just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So you know, as long as that puts the labor market in balance. The fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, you know, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, you know, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you know, you want that clear thinking and you know, expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you ask about the June SEP, you know, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, you know, we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And
Looks
just
like
on the
it's
point
trying
about policy being
to
only
bounce
modestly
back.
restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. You know, we're going to be at some point when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, you know, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to, you know, to slightly looser policy.
Nick Timmeros, The Wall
I'm
Street
waiting to see
Journal.
what Trump's going to say
Chair
about all
Powell,
this.
my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is, you know, substantially higher than before. And the evidence seems to be mostly not paid only to a
Bitcoin
small
is not
extent
liking this.
through exporters lowering
Markets are not
their
liking
price.
this. We're literally
And
everything's in
companies
the
or
red right now.
retailers, sort of people who are upstream, institutions that are upstream from the
117
consumer are
coming,
paying most
incoming.
of this for now. Consumers it's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but you know, the truth is they may not be able to in many cases. So
Look at that, right when you
I
said
think
that green
we're just
candle.
going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. we think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic, expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. You know, we haven't reacted to new inflation, but I mean, I wouldn't insist upon that. But I don't think, I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though, and that means we want to do it. If you move too soon, you
Bitcoin
wind
just
up
dropped down to
maybe
117.
not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep
117,000
inflation
even right
controlled.
now.
Ideally, we do it efficiently.
Oof. Just make them stop talking.
Michael McKee from Bloomberg
Literally
Television
says
and
the
Radio.
same thing over and
The
over,
One
bro.
big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on
hear
hold
that?
or cutting back on the number of rate cuts you would expect
Stimmies?
for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say, when you think that, you know, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's
paying
you
$1
know,
trillion
we have
right now
a mandate,
in
and that's
interest
maximum
rates.
employment and price stability.
I'm sorry,
And
in
it is, it's not something we do to
yeah,
consider
interest.
the
$1 trillion
cost
right
to the
now.
government of our rate changes.
Just off
We
of
have
our
to be
debt.
able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank
He's
does that.
basically saying he doesn't give
And
a
it wouldn't
shit.
be good for, if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Hi, Victoria Guida with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration
my
has been
head's in
looking
the way of
into,
the, chart
do you
coming down
see
so
their
far.
interest in that issue as being directly tied to the president's push to get you to lower interest
Let me
rates?
move myself over here.
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Donald
Are there
pulled
any
up
aspects
on
of the project that they've raised that you see as making you reconsider any aspects of the project?
So, you know, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since, Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation, sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to
BRB.
the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just
what'd I miss?
the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so that, where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying is a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies will certainly be taking advantage of the fact that the tariffs and all the discussion of how they're going to
open up a long.
Companies will raise prices when and as they can.
Will bounce back.
And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't.
Damn,
but what do you know? The price of dryers went up too, just like washing machines. So companies will often just go across the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this.
AI is pushing that shit, boy.
We're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so
the markets keep coming down, bro. Everything, even on DeFi, is going to get affected.
We don't set mortgage rates at the Fed, right? We set an overnight
rate.
We're
coming down.
The rates that go into mortgages are longer term rates, like Treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed's rate.
Let's
It's not
see
that
if
we
this
don't have
116,
any effect. We do
6
have
can
an
hold.
effect, but we're not the main effect. There are other things though going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, and that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment.
Inflation
And
right now is
that's-
2.4%.
That's what we can contribute to housing.
2.4.
There are lots
Came
of other
down from
jobs to do for the
9%.
private sector and Congress, but that's what we're trying to get to. And, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away,
AI,
but
that's
so far
true.
not very far away.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation?
It doesn't
back
matter. They keep moving the
nearly to
goalposts.
target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the
Looks like
totality of the
116.6
evidence.
just
As I
broke
mentioned, there's
below.
quite a
We're
lot
at
of data coming in
116.5 right now.
before the next meeting. Will it be
S&P's
dispositive of
dropping
that?
fast too.
It's
NASDAQ,
really hard to say. We don't
Dow
make those
Jones,
decisions.
everything's in the red now.
Right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing.
How long has this guy
Does
talked
that
for,
kind
bro?
of thing affect your thinking, or do you just need to see the
already
number
bored
come
with him.
down
I think
closer to 2?
We'll look at everything. It's as I mentioned. A pretty reasonable base case is that this will be a one-time price increase, and in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't. Again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target. Thank you.
So this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and the Treasury only speaks to the dollar. It's not something that's been a topic of major discussion at all at the Fed. I wouldn't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the US economy? Thank you.
We're monitoring the situation. We do, of course, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But we really need the government data. Really is the gold standard in data, and we need it to be to be good and be able to rely on it. And we're not going to be able to substitute for that, but if we'll have to make do with what we have. But I certainly hope that we get what we need.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us, and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks, and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Where's our next support level? 115.8 inbound.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper income households. How do you see that evolving in the next few months? How much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing. But so generally, if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true, and it was, again, right in line with what we expected.
115.9.
The GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which
we should see a rapid rebound after he's done talking.
Some of that can be can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to, and there's no question that it's slowed. And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables.
Look at
that. We're assigned to.
Let's see if we're going to bounce.
Maximize.
And just to follow up on what my colleagues were asking about this dissent, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall.
Look at that bounce off.
What was the discussion about the state of the private jobs market?
Doesn't mean it's going to hold, but look at so far that bounce.
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation.
I agree with you, Ricky.
Certainly in the last.
All right, 115.8 is not going to hold. It's coming back down.
But had come down a bit, and if you take the QCEW adjustment seriously, it may be even lower, maybe close to zero. But the unemployment rate was still low. So what that's telling you is
what does he want? This guy wants a freaking 10% unemployment rate.
So that's
he originally said 4% 2 years ago.
You've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor force is just a great deal slower. And those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually
so
cooling.
far we bounced. Look at that bounce off of 115.8 like I called.
Vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market.
I want to open up
I think
a
you
long,
have to see that there are downside risks. It's
this
not,
guy keeps
you don't see
freaking
weakening
talking.
in the labor market, but
That
I think you've got downside risks in a
might have
world
been the
where
spot.
unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Ethereum's down to 36.90 right now, 36.90.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision.
If
the
we
2
come back to
dissents.
retest
Was there talk
115.8,
during the
it's gonna
meeting? I know
probably
you're
break.
not going to talk about exactly what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So, we have an economic go-around where people talk about the economy, and then the next, and that's yesterday, and then today we have a monetary policy go-around. All the way around the table, everyone gives their views. So the discussion around policy was, the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive.
DeFi's
somewhat
not
restrictive,
doing bad right now.
because
It's
we
holding.
want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express. I won't tell you the reasons. They'll issue some kind of a thing in the next day or so. So, but that's the story.
We're gonna
And
cover the
I would
markets. I
say,
think he's almost done here.
Well argued, very thoughtfully argued all around the table. Good arguments, and it's a situation where an unusual situation. The economy is in good shape, but it's an unusual situation
It's in
where
good
you have
shape. We want it to be
risks to
bad.
both your employment mandate and your inflation.
Look at that
That's
V-shaped
the nature of a
recovery so
supply
far off
shock.
that 15.8
It's
level that we
probably
called.
not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so
Should
that
open up a log.
different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall.
All right.
From that
Cut his
standpoint.
mic.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because, inflation is above target. When we have risks to both goals, and one of them is
It's a
farther
broken
away
record
from
here,
goal
guys.
than the other, and that's inflation. Maximum employment's at goal. So that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is.
Ethereum has now
So
broke
that's
below
that's
the
the framework
236
I
fib.
think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Shut him up. Shut him up.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I was wondering if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak. And the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total, hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised.
So far, that 15.8 is holding, guys.
The labor market data
might have been the spot. That might have been the
bottom. Continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid.
Ethereum.
Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation, because you're being pulled in two directions, and you have to decide which of those to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not gonna say that. No, I just think we're going to need to see the data.
He will not give anything.
And, it can go in many different directions
whatsoever.
The inflation data and the employment data, and we're going to make a judgment based on all of the data and based on
he can't even say, if the data comes in, we would be happy to start reducing rates. Nothing. He won't give anything. But uncertainty and tariffs.
Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you.
15-8. That
Thanks
was
very
the
much,
play
everyone.
right there, Eduardo. He's done. Whew. Thank you. Get out of here. Holy crap. Oh my gosh. All right, guys. So let's just go over what we just heard. Nothing, right? Basically nothing. Pretty much what we already knew what was going to happen. The feds, they didn't reduce rates. Another pause as of now. Obviously the markets are not really liking it. You can see we did come down to a key spot that did hold. I mean, not too bad. I'm not mad at it. We dropped down to about 15.8. Right now you can see we are rebounding right around 116.3, trying to rebound. In a nutshell, basically what we already assumed what was going to happen. He's going to come out, talk circles, right? He's not going to give out any indications of any kind of potential rate cuts coming up at all, right? He's going to keep moving the goalpost. They want unemployment to continue to rise. We have unemployment numbers dropping on Friday. On Friday, we have unemployment numbers dropping, which is supposed to go from 4.2 to 4.3%. Keep in mind that Jerome Powell himself said 2 years ago when inflation was at 7+%, he had indicated that we were looking for a 4% unemployment rate for them to start reducing interest rates, right? Remember, we saw the feds reduce interest rates 8 months ago, conveniently right before an election, and inflation was double what it was right now, and unemployment was around 3% at the time. Unemployment has jumped up 25%, over 25%. Inflation has dropped down over what are we? I don't remember what inflation was exactly, but we've seen inflation obviously drop down almost to 2%. We're at 2.4%, and this guy cannot even give us a hint of some kind of a reduction coming up. With all he can basically say is uncertainty, tariffs, and they have to monitor the market. That right there, if you can hear, it's frustration. It's frustration because it's become BS. It really has. It's become BS in regards to just with the feds. It's like, dude, it's overdue. We saw the video earlier of Trump talking, and I don't care how you feel about him. I'm not getting political, but he mentioned some key things. GDP has jumped up 3%. We just got GDP numbers today. Great. Europe has reduced interest rates 11 times in the last year. 11 times. They're doing perfectly fine. Inflation has not gone crazy over there. It keeps reducing. Why are they doing this to us? Another thing is right now the United States is paying over $1 trillion in just interest off of our debt. If we were to reduce just by every point, right? Every 100 basis points would reduce our interest payments annually, $365 billion just off of 1 point or 100 basis points. You guys do the math here. It just doesn't seem right on what he's doing. Economically, the economy has provided everything that they've been looking for, and they keep moving the goalpost over and over and over. So it's frustration at this point. I think it's BS, but regardless, it's out of our hands. So with that being said, we've seen Bitcoin and the whole market kind of go red. Right now, we're starting to see hopefully some kind of a recovery. I'm not expecting a massive V-shape, us running back up to 120, immediately. Let's see here. I'll pull up the 5-minute and you can kind of get a gist of what's going on here. So Jerome Powell starts talking, absolutely talking in circles. We basically, in the last hour, dropped down to about 115.8. Since then, we have kind of looked like we want to rebound. On the 5-minute, we are getting another red candle coming up. I wouldn't be surprised if we potentially come back to maybe retest maybe 116, maybe this 115.8. Maybe we come back to retest one more time. Obviously, we have a lot of people that weren't watching all this live, so we might see a little bit more sell pressure. The actual market, the stock market, is going to be closing in the next 40 minutes as well. So we'll see how this plays out, guys. But again, today, nothing to see here. Just a whole bunch of just nonsense, crap. Let's see what the markets, if they've shifted any today for September. Let's go over to September. Look at that. Look at that, people. This is why the market is going down. Just earlier, we were at 38% the 38% of investors calling for a pause. It's jumped up to 51.8% of the market now is basically indicating that even in September, nothing's going to change. They're going to keep kicking the can down the road. So, yeah. Just frustration here. Frustration is the least of it. But, again, we are going to see unemployment numbers dropping on Friday. That's going to be August the 1st. It's going to be a big thing here. So looks like, okay, so I was a little off on the numbers. Unemployment right now is at 4.1. It's forecast to go up to 4.2 for unemployment. And, non-farm payrolls, basically jobs created, previously was at 147. It's supposed to go down to 110. With these numbers, it's nothing crazy, but it is in a direction that the feds are looking to see, right? They want to see the weaker labor market, aka unemployment, continue to move up, and they want to see less jobs being created. And you're wondering, like, why the hell do they want to see the downfall of the economy? Well, they want to see less people working. That means that less people have money to spend. And how they equate it is as less money to spend means demand for goods goes down. Is how they equate it. So it is what it is. Daniel coming with the hopium, and I appreciate that, saying hopefully more changes to accumulate. Exactly, bro. More chances to accumulate. I agree with you, bro. I agree with you. I mean, that's the only way we could look at it, right? That's the only way that we can actually look at it as of now, is we're just getting more opportunity to accumulate more, because we know where the end goal is. We know where we're headed, right? So right now, Ethereum, let me look at this real quick. So look at this. Ethereum on the 5-minute, 236. So far on the 5-minute, we're getting rejected. We broke below the 236. Remember, I told you guys, the key thing is we want to hold this 236. If we do come down to the trend line right here, which is around the 36.35, not, we're still very good as far as being bullish, but definitely us holding the The 236 fib retracement at around 37.20 is obviously the more bullish scenario that we want to hold. And you can see we actually are getting rejected as of now on the 5-minute as we've come up to test that level. So we'll see how this plays out. Obviously, I think that, you know, we have a little bit more. We have the unemployment rate coming out on Friday. Other than that, the markets will probably, you know, it'll just kind of brush by and you know, until we have to deal with it in 6 more weeks from now. So we'll see how this is. Hopefully the markets can recover. But for now, just like Dan said, you know, if you see some good plays still available, you know, obviously you're going to take advantage of it. DeFi, not really changed. ZBEC has come down slightly. Looks like it's trying to find some support around that 51 area. So, and then let's look at the watch list real quick, see if anything's really fluctuated on DeFi. Nothing much. Where's Mask at? Mask is still doing good. ZBEC's doing all right for the most part. I mean, you guys can see, looking at the bubbles for the 1 hour, you can see this is pretty much it. Doge is down 4%, WIF is down 4%, SUI down 2%, TON 3%, Uniswap 5%, Fartcoin down 4.4%, Pepe is down 4%, ADA down 3%. So you can see, obviously, the markets are not happy with what was said and what was done for today. So, but I do think we're going to get past it in the next few days, getting into next week. So we'll see how that plays out. But with that being said, guys, that's pretty much it. We had 16 votes. I know a lot of us voted before. 50% saying, 56 saying bullish. 44% saying bearish. Obviously, how was Powell going to come out today? We honestly thought that he was going to come out and at least indicate that there was going to be some hopium coming out in September, but he completely deflected off of that. So Craig said we're still good, no worries. We are, bro. We are. We honestly are. We bounced off the 115.8 for now. So we'll see how the markets close today in the next 30 minutes, and then kind of, you know, as tonight you're going to see the Europe markets because they're all asleep right now. Europe, Asia, all that stuff. We'll see how they play out. We might see a little bit of sell pressure. Maybe they come through and they eat the dip up. So we'll see how it plays out, guys. But with that being said, hit that like. If you are new here, please hit the subscribe. We are live here every single day. Members, we're probably going to be going to the trenches tonight. I will give you guys an update in regards to that. But other than that, guys, thank you so much. Have a fantastic day today. All right, guys?